To build anything that truly lasts, it takes time.
In from Eternal, we have some more details coming in on the numbers right now. If you take a look at numbers on a year-on-year basis, consolidated revenue is surprising, a very positive number on revenue coming at 7167 crores. We were expecting this number to come around 6624 crores on 8.2% uptick versus our expectations and 70.4% higher on a year-on-year basis. So big beat, but that's all the positivity that we can see as of now from the P&L statement for Zomato, because everything else is a miss versus our estimates. Net profit has come in at just 25 crores compared to our expectations of 105 crores. So big miss over there. It's down 90% on a year-on-year basis compared to 253 crores this time last year. It's largely expenses like advertisement expenses, food and delivery charges. You have other expenses that have inched up almost double on a year-on-year basis. That has weighed on the profitability quite some bit. If you take a look at the EBITDA number, that's come in at 115 crores, which is down 35% on a year-on-year basis. Once again, a miss versus our estimates of 179 crores, and for the margin also we were expecting 2.7%. The number has come in at just 1.6%, a whole of a percent lower than what we were expecting, in a 260 bips cut on a year-on-year basis. So once again, a miss coming in on the EBITDA margin front as well. What we understand from our first look at the documents, they are going to be incorporating a wholly owned subsidiary known as Blinkit Foods Limited with a share capital of 1 crore rupees, and it is going to be a wholly owned subsidiary. Once it is incorporated, it belongs to the food services category, and it is engaged in the business of providing food services. So that's something new that we are seeing this time around coming in for Blinkit. Of course, once the letter to the shareholders is out, we'll have some better idea about the segmental performance in terms of food delivery, where we were expecting an 18% GMV and a revenue growth. For Blinkit, we were expecting very strong GMV growth as well. So let's see what those numbers look like. We'll have those in a short while from now. But that's the first take on Zomato. I just want to see what the stock of Eternal is doing right now, because while the revenue is a beat against our expectations, you have all sorts of other expenses that have weighed on profitability right now. In fact, the stock is higher. So seems like the street is only focusing on the revenue number for now. We'll have the final print on the segmental performance in a bit, Shrishti, but till then, we'll just see what the stock has to do.
Well, yes, 5% uptick is what we are seeing on Zomato, and that's really interesting to see that the company has incorporated a wholly owned subsidiary called Blinkit Foods right now. Nitin, on the QSR space, any take that you're getting to understand, because yes, Eternal will be a bit of a volatile counter for now, but any reading on the numbers and your overall take on this particular space, because the companies are no more just a food delivery platform, they have expanded into delivery platforms as well, and now a faster food delivery is what they are targeting. How do you see this space expanding, because it has already got a lot of investor interest indeed?
Well, if you go anecdotally from experience that each one of us has, it's only going up in terms of individual ordering that everyone is doing. So I think the whole QSR space will grow. The key question will come in terms of the competitive intensity in the space. I think currently that space is seeing an enhanced level of competition. The hope really is that, and there is a lot of burn that is happening. The hope is that ultimately in all of these businesses, there are only 2 or 3 players who are left. And there is a hope that the existing listed players will be in that top 2-3 bucket. And when that would happen, the ability of these players to price their products better is going to create a huge manifold growth that will happen in profitability on the size that they operate at. So over the long term, we are quite positive on this space.